Tariffs to a lackluster AI rollout, Apple shares posting their worst month in more than 2 years. All of that forcing star analyst Erik Woodring of Morgan Stanley to cut his price target today. He does join us now to tell us exactly why. It's always good to see you and great to have you on a day like today.
Thank you for having me on, Scott. I appreciate it.
Yeah, why'd you do this?
We're following the facts and we're following the data. You know, the two things that we did with this note overnight was obviously lower our iPhone forecast really in 2026. And, you know, we've talked about this a number of times, but I viewed Apple Intelligence and the lack of backwards compatibility as a key factor in driving upgrades, starting with the iPhone 17 launching this fall. And part of that, and this is dictated by our AlphaWise survey work, is that Siri, or an advanced Siri, integrated Apple Intelligence, is the #1 feature that consumers want from Apple Intelligence. And in the event that they don't get the Apple Intelligence features they're looking for, 50% say they defer their iPhone purchase as a result. It has an impact on upgrade rates. And the news out late last week about the delayed advanced Siri integration means I took a second look at my iPhone units and determined that one of the catalysts that I had previously embedded into my numbers wasn't necessarily going to materialize ahead of the iPhone 17 launch, and therefore cut my numbers to kind of take that factor out of my expectations. So 230 million iPhone shipments in calendar year 25, largely unchanged. And then 243 million iPhone shipments in calendar year 26. That's down from about 255 million units. That was the first change. And obviously the second change that maybe had a smaller impact was taking into account some form of tariff costs into Apple's cost structure. Again, we think about 55% of their products across all business lines come from China. China obviously has a 20% tariff today, and we've seen that Apple has not raised prices. We know that they would, or we can highly expect them to be trying to mitigate these costs kind of behind the scenes, for example, using India production. That wouldn't necessarily be tariffed, but at the end of the day, we wanted to be prudent and incorporate some degree of tariff costs into the model because, again, they guided the March quarter on January 30th. China tariffs went into effect for the first time on February 4th. We wanted to make sure that we were taking into account some of those costs.
Sure. Could we go as far as to say that the AI rollout here and all of that anticipation from WWDC has been a flop to this point?
I would say that the rollout has been longer tail than we would have expected, right? I think if we could all go back to June of last year and watch a number of the videos that Apple came out with and kind of dream the dream, there was a lot to get excited about. I still think there is a lot to get excited about. Apple is a very unique position controlling the hardware, the silicon, and the underlying operating system. They still have an advantage in that sense. But again, there was an expectation that we would get an advanced Siri to some degree, this kind of coming April and May alongside iOS 18.4, and that's not happening. And there's a bit of ambiguity exactly when we get those features. And so the time to which Apple Intelligence is adding what I would call the killer app has been longer than expected, though that's an expectations miss. This is hard work to do. We're still very early days. That doesn't mean that Apple cannot catch up and still be successful, but it is longer tail than we would have expected, and we're adjusting our numbers as a result of that.
We certainly have discussed at times the fact that, you know, the criticism of the stock was trading at a premium multiple for the lack of premium fundamentals.
Right.
And it feels like that's now coming home to roost a little bit.
Sure. And with Apple, listen, it has always traded on its own paradigm. I think as an Apple analyst and knowing this stock for 10 plus years, you really have to get the fundamentals right first and then valuation second. If we made a valuation argument over the last 10 years, we would have said it was expensive. And so that's not to say you shouldn't take into account valuation, but the point is more, let's understand where the numbers are going. Are we seeing growth accelerate or decelerate? Are they missing numbers or are they beating numbers? And at the end of the day, we still do believe growth can accelerate, just not to the same degree that we had baked in. And so, yes, we are seeing some multiple contraction, rightfully so, as some of the predictability of the model that maybe we thought was embedded is not necessarily there. That's not to say that the multiple can't derate further if there's more concerns, or re-rate in the event we had more confidence in the Apple Intelligence rollout. And so, again, it remains a very dynamic situation here. But to directly answer the question, in the near term, it's kind of the market movements combined with the Apple-specific risks or lack of predictability in Apple Intelligence that is causing some of the wind to come out of the sails from the multiple.